Shares of pet company Chewy surging after reporting a boost in sales in its first quarter. Its autoship customer sales were up over 6% as consumers looked to seek their best deals on some of their pet needs. You're looking at a jump of just about 26%, the biggest intraday jump that we've seen in the stock in well over a year. We want to bring in Sumit Singh, the CEO of Chewy, and Yahoo Finance's executive editor, Brian Sozzi, here joining us. Sumit, it's great to see you. Congratulations on a strong quarter. We're looking at shares here surging in early trading. So talk to us just about the trends that you're seeing within your business and whether or not some of the strength that you saw last quarter, whether or not that's carrying over into the current quarter right now.
It's nice to see both of you. Thank you for having me. A couple of things are really positive. One, we're seeing green shoots in the industry. So we've called this the year of normalization. And we believe that we've got a fairly good sense of demand and fairly good sense of how this normalization is occurring. Second, inflation was an important point carrying through last year. And you're starting, to see that sort of wane off. Third, we saw healthy sort of balances between net adoption rates and relinquishments rates that came through from shelter and rescue community every month this year to date. So all of these are good inputs that essentially lend some encouraging signs towards the normalization of pet that we've been talking about. And you put, our great service and this quasi-subscription model that we talk about, which is autoship, and it just, consumers were able to attract the right type of consumers and get them to really spend on a repeat basis. We pass on value and we drive a ton of convenience, and the overall value proposition is resonating really loudly.
Sumit, I did a casual search, your website, a couple others, dry dog food. 40-pound bags of dry dog food. I was looking for Blue Buffalo, $65. And this stuff is pretty expensive. What is your outlook for inflation? Maybe you could speak to the consumer environment. Are prices for any of these products, for food, for pets, going to come down at any point this year?
Yeah, so Brian, it's a great question. What we've seen the last few years is an unprecedented amount of inflation that has passed through the system. Normally, when you look at pet over a 10, 15-year period, it's natural to expect pricing to be somewhere between the 2 and 4% range on a comp basis. And yet the last 3 years has been in double-digit percentages. Now I started this call by saying that we have started to see that come down into the low single digit starting this quarter. And most of pet food and consumables is MAP compliant, which is there is actually a floor underneath the pricing, and brands do a good job maintaining that pricing structure. So not really expecting something structural to change in pricing moving forward. But what we could expect the latter half of this year is incremental discounting as both vendors and retailers sort of lean in to both incent demand generation as well as conversion. And we're starting to see that, treats are seeing a little more elasticity than they were in the past. So that, I think, trend will continue to the back of the year. We've incorporated that in our guidance. We expect higher profitability even as a result of that, and we'll pass that value on back to the consumer.
And Sumit, we did see active customers decline by 95,000 quarter over quarter. What would you tell investors who maybe want to see greater confidence in the stabilization story and that return to growth?
Yeah, there are certain inputs to active customer formation. When you look at net customer acquisition, it's tied to this trend of pet household formation, which is then closely linked to inflation. And that's keeping back demand for discretionary products or demand for categories such as vet food, et cetera. And so as I talk about the normalization, we're seeing some green shoots there. And we were pleased with our acquisition rate, and they continued higher than our reactivation rate. The reactivation rate was particularly strong this quarter. We reactivated, sort of mid-teens level higher number of customers than from a year-over-year comp point of view. And then we also saw greater retention of cohorts, especially starting the back half of 2022 cohorts. Second order purchase rates were good. So overall, as you sort of put this together, we're quite encouraged with the efforts that we're taking. It just has to sort of take a little bit of time through this normalization to occur. But in the meanwhile, share of wallet with us continues to grow. We were up 9.5% on a year-over-year basis, reaching $560 share of wallet per customer, which we're very happy about.
Some new areas of discussion on the earnings call moments ago, at least that I picked up on. One, you're now opening vet clinics. You have 4 of these opened, and it sounded like you have maybe a couple more coming in the back half of the year. And you're testing paid membership. What's your hope with the vet clinics? And then on the paid membership front, how should investors think about that? Is it more of a model like Target's doing with its new paid membership, or is it something like Costco?
Yeah, on Chewy Vet Care, the clinic initiative, Brian, you and I have spoken in the past, and health has been a strategic vertical for us for many years. And so what you're seeing is a culmination of all of the products and solutions and technology that we've built both for customers as well as for the veterinarian community over the past 5 years or so. And so imagine, this kind of first-party proprietary tech and product orientation that we've built, and we said, well, what do you do with this? Well, we have 2 paths. We could offer it as a SaaS offering to clinics that are seeking this improved and sort of modernized experience and architecture as the industry progresses forward. Or we could dog food our own innovation, and we said, well, this is a great way of keeping the Chewy customer into our ecosystem, letting them experience the magic that so far had been led by product merchandise, and making Chewy physically present, right, with that experience into the marketplace. And so far we like it. Another positive trend is vet recruitment and retention is a real pain point in the industry. And so, we want to be experience forward to our veterinarian community as well. And so far, we've been able to attract and retain the right quality of veterinarians, which we're super happy about. So broadly speaking, we believe this will be a flywheel, an ecosystem that will continue to drive greater retention, greater new customers to the platform, and also greater engagement from existing customers. So more to come. We've launched 4. We've given guidance of about 4 to 8 this year, and so far we're on track to that. Your second point about membership, we feel, first of all, autoship is a tremendous loyalty program for us, right? 77% of our net sales this quarter went through autoship. At the same time, we believe there's an opportunity to bring forward the discovery of the Chewy platform to consumers, millions of consumers, and paid memberships, right? When you go out and attract customers who are locked into the ecosystem with tremendous value, it can essentially be another choice for customers to select your platform. So we feel paid membership and autoship are complementary to each other. A lot to learn through the back half of the year. We've launched it to a cohort of customers starting last week. And I'll be back here to talk more about it in the future. That's good to hear.
The push into the vet clinics really reminded me, it's expensive to own a pet. Something goes wrong with a pet, they break their leg, it could be thousands of dollars out of pocket. And I think that cost really surprised a lot of consumers. As an industry, is there any way to bring these costs down? And don't laugh at me here, but is there a way to create like Medicare for pooches? What do we need to do to help alleviate the burden on people that do own pets?
It's actually a very good question, because if our submission behind the healthcare vertical is to make pet healthcare affordable, but also accessible, right? So accessible and affordable. And pet healthcare is expensive. And it's a couple of ways that you could bring insurance down costs down, for example, is the advent and the growth of the insurance category, right? When you look at kind of European countries or all the way to Australia and New Zealand, I mean, insurance has penetrated to sub kind of teens or mid 20% ranges. In the United States, it's sub 3%, right? But growing fast. So as one component of building into the Chewy Vet Clinic, we first launched insurance with a couple of high bar providers. And now we can bundle in or layer in that insurance as part of our experience or the membership plan that you might actually procure when you're a Chewy vet customer per se. And that greatly subsidizes, it lowers the barrier for visits into the clinic and greatly subsidizes medical cost per se. Second thing is, lowering overall cost to serve from a veterinarian and industry point of view, which you can do using smart technology and digitalized experiences. When you do that, you can essentially pass that value and that savings back to the customer, which is very much as part of our roadmap. So we're trying, and the road ahead is long, but we're bullish.
Sumit, I'm curious, what do you expect to see those spending trends to look like in an uncertain macroeconomic environment like we're in right now, just in terms of how much there is just on the willingness, the part of the consumer, the part on the customer here to spend on their pets during a time when they're forced to cut back on spending elsewhere? Are you seeing that at all? And will you, do you think, be forced to offer a bit more promotional activity in order to boost some of that business, specifically also what's going on within your vet's clinic?
Yeah, health is even more resilient than your typical food and supplies. So your typical consumables categories or non-discretionary categories, health is the most resilient of them all. In fact, when you survey pet parents, over 80% of them will tell you that they would rather treat their pet before they actually put, their treatment sort of in picture per se. So it's a very sticky category from that standpoint. And as we sort of continue to make healthcare more accessible and lower barriers and make it more affordable, we're seeing, you're in the age of sort of digitalization of animal health, right? And so food and supplies came first, and now, it's the time of health. And I believe we're credibly participating. So no, I don't see, a tremendous risk of deflation or tremendous risk of price compression in categories like these. We've talked about some incremental discounting to incent demand generation in some other food and supplies type of categories, but health is likely more insulated.
Sumit Singh, Chewy CEO, and Yahoo Finance Executive Editor Brian Sozzi, thank you both so much for joining us.
Great to see you guys.